Check, check, mic check, check, check. 1, 2. Good evening, everybody. I hope you are having a fantastic day today. I hope you caught some of that wicked down move today we've been looking for. Hey, what's up, Kirk? Damn, you are fast. What's going on, man? Uh, hope you're doing okay. I did see you dropped a comment on one of the other videos of wanting to go check out the video of how to pass Apex. Don't worry about that. I don't know where you are in your trading journey, but if you're just beginning, it's okay. It takes some time. There's so many like free things that you can go to anyways, but yeah, I'll definitely be curious where you are in your trading journey. But we'll have to, you know, I'd be very really curious about that if you drop that in the chat at some point. But let's do review for tonight and tomorrow. Tomorrow I'm actually going to be in the office for sure, in the office physically, so I will not be here to trade. But tomorrow the key bit is 8:30 in the morning. This is where we're going to get the most volatility. Unemployment claims typically does a lot. Surprisingly, pending home sales is going to give you a nice jolt. Oh no, I already watched it 3 times. Man, I'll have to do a video of like my favorite models and what to look for. Basically, in order to stay in trend, I think that was your question. We'll go through this as we go through the higher time frame to lower time frame analysis, but you see me doing higher time frame to lower time frame analysis, which means starting at the daily chart every single time, at least the daily chart. In order to understand where your daily bias should be, you need to be charting on the higher time frame levels, because if you can get a sense of where price is going at that time, that's how you're gonna know you're moving in the right direction. So let's take a look at the charts. Let me bring over a daily. Let me bring over the daily chart here. And let's move this to the other side. Okay, so on the daily, let's zoom in a little bit here. So on the daily, we actually have gone all the way through this daily fair value gap that we pointed out a long time ago. Remember those big blue boxes? So right now we're actually at the bottom of a weekly level here. So we do also see that this is a bullish order block here. But this is where price gets a little bit tricky, because we've gone down quite a bit. Our order flow, we haven't quite gotten all the way down to equilibrium down here yet. So I do think that we will get there at some point, it's not going to be a direct straight shot unless there's like some crazy war or something like that. But you do need to be wary of the fact that we have touched a weekly buy side imbalance, sell side inefficiency low. So that makes me think, okay, well, there's a couple of things down here. There's a bullish order block. We have to see if that will get respected on the daily or not. Otherwise, it's going to then go for the midpoint of this monthly. You see this red line here and this red line here? So between here and here, there's a 50% point, and that is the monthly premium BISI consequent encroachment. See that there? That red dotted line? Oh, no chart showing. Sorry. Gosh, how could I miss that? Let's start over. Thank you. Thanks, Kurt. Save my stream there. Appreciate you. Okay, so let's go back, right? So on the daily, we see that we reached this fair value gap here, and we ended up coming through it to this yellow line. Remember, these yellow lines are weekly levels. That I look for gaps. So where you see a high, a body of a candle, and the low of another candle, I consider that to be a fair value gap, right? There will be a whole bunch of them, but you basically want to look for fair value gaps in a premium when you're looking to go short and when your bias is short. Or let's look at a different from a different perspective, right? So a while back, we can see that price was bearish here, lower low, lower high, lower low, lower high, lower low, lower high, equal low, higher high, equal low, higher high. And then we see market structure shift right here to the upside, right? So right at that moment, my eyes are drawn back to where are the imbalances? So where are these fair value gaps? Which ones have touched? Which ones have not? And I look for them to give me an approximate idea of, hey, here is one here and here is one here. We could draw to that and then continue back in the direction of my bias. So I'm constantly looking for, in any given swing range, where's the discount? Meaning, if you were to take, and let me show you an example of this. So we see from this chart here, we see this swing high, right? So if I were to take this swing from here to here, I would see the 50% mark. That 50% mark is around here, and this fair value gap and that fair value gap are fair game. Now, it doesn't go all the way down to that other fair value gap here, which is left unopened, but it does come down to this one here, and we barely smacked through that before. So I would be looking for, and this is where you start to get high probability as you see these higher time frame fair value gaps, right? So you start to see things like this, where if you draw it out from this candle's high, the body of this candle, and this candle's low. If it's just a little wick, you know, it sells off and then buys back immediately that day, you can extend that forward through time and you can see how price reacts here, right? Boom, hits it, skyrockets. Boom, hits it, inverts, and completely gives you a bullish run in the coming few weeks after that. So the key is to look for trends and go back in your charts and look for trends where price has made a lower low, higher, lower high, lower low, lower high, lower low, lower high, maybe a higher low and then a higher high, higher low. You see that shift there? You feel that shift there? So higher low, higher high. Oops. Higher low, higher high, higher low, higher high, higher low, higher high. And then eventually we get to this shift point up here, which was a monthly gap from back here. And our market structure shifts again. Higher low, lower high, lower low, lower high, lower low, lower high, lower low. So we anticipate, if you understand that concept alone, that's going to give you a good enough macro bias to where you know what to then look for. You know you're looking for shorts at that time. You know that market structure hasn't shifted, it hasn't hit a really key level, meaning 50%, at least equilibrium. It hasn't reached that level yet. And that's where the algorithms say, hey, institutions, price is at a point where it is of fair value. It is capable. You're allowed to buy it below that equilibrium point because it is at a discount price. So that is why you oftentimes see price returning back to equilibrium of any given swing, right? Sometimes the 60, 70% marks of those. If you take every single one of those swing highs to swing lows, you'll notice, and here's where some of the magic comes in. Use the bodies themselves because it gives me a little more accurate move of where price actually played. And you can kind of see this retraced up to about the 70% mark. And then if you take this down to the high there and the low of this swing around there. Oops. We can see that it also ended up going to the 70.5 mark right there. And then you can kind of get this. We don't know where the low is on this one, right? So we can't really put a Fibonacci on that yet. But that being said, we look for areas of liquidity down here. So we see a volume imbalance down here. Could reach for that. We see a wick midpoint. It could reach for that. We see a premium BISI consequent encroachment. So this month's BISI, the midpoint there, we see that as well. So each of those could serve as bounce points, depending on also what happens on a macro perspective. Or it could bounce here and retrace a bit, or it could consolidate. So we're at a very key level that had a lot of confluences blown through. Even now in Asia, we see price continuing downwards. So until we see evidence otherwise, we are still bearish. So there's this old saying, the trend is your friend. Well, that's only true if you're in front of the trend. So on the hourly, if we take, or on the 4-hourly chart, we see that price opened in this new week opening gap, right? Or this new week opening gap here, this one here. So we see that it opened, peaked up, went down, went higher, took out buy side liquidity, and is now expanding to the downside. Let's take a look and see what might we possibly be aiming for on the 4-hour chart, right? So we can, that's a old higher time frame low, which we've blown through completely. So we kind of disregard that at this point in time. But let's see what else there is. So we have this this weekly high and low, which we haven't been touched yet. On the 4-hour, we have this whole range right on the edge of this premium BISI consequent encroachment. So the next draw on liquidity after, let's see what happens at this weekly premium BISI low level, because it basically took out the monthly and weekly low right now. Where it hasn't gone is it hasn't traded back up yet. So I anticipate that we at some point are going to head back up to this low of 14,514.25, and we're going to treat that as a mitigation block there, and likely leave this gap up here open. I actually don't need those anymore, so I can remove some of these here. So that's what I'm looking for on the downside, okay? Now, it did hit a weekly level, so you need to be weary about what happens at these weekly levels. Even if it does retrace a bit, it will still typically end up heading downwards unless there's a market structure shift. And then you need to be careful, because it can certainly go long, a lot longer than your stop can stay in the game. So let's go down to an hourly and see what else we've got there. Oops. Now notice how I'm going from daily to 4-hour chart. That 240 minutes is 4-hour chart. Looking at where liquidity can be headed towards, and I'm framing that on the daily. So you don't see me looking at any buy side points, right? But at these major levels, you're far more prone to see reactions up, or blow throughs, retouches, and then continuation downwards. So we know that on the 60-minute chart or hourly chart, we see that we went and took this buy side here towards the latter part of the day, and then continued downwards for our Asia open. it does look quite heavy. So because we've also come down this far, this fast, I'm really hesitant to short any longer. It can certainly keep going, but I would be weary about taking a short at these levels because typically you see some kind of retracement when it hits a weekly level, unless it's really, really, really heavy and it's willing to drop a lot. So that is what I'm looking at on the hourly chart. Also today on the hourly chart as well, let's take a look at today's price action while we're here. So this is this morning, right? If you recall, this morning before I thought I had to leave, I marked this 14790.25 8:30 a.m. High. I marked the buy side being here, and there actually being a price line right around there. I think I have to go down to a lower time frame, but we definitely saw that right before the right around the 8:30 a.m. news embargo, we saw that price ended up going straight up to this fair value gap, this sell side imbalance on the hourly chart. Now note, this is really important here. So note from this swing high to this swing low. Actually, I should probably make this a little bit more clear. Remember, this is one of those situations where if you used the whole wick, it would look a little bit odd, right? So we don't see a potential retracement here, right? So nothing's there. But what we do see is this imbalance, this low, this body, and this high create what's called an hourly fair value gap, specifically a sell side imbalance. So that is the only imbalance here that exists as we go into the morning. So naturally, we would expect that price ends up going back to this imbalance. And what does it do? Right at that, I think it was at about 8:15 to 8:20. Yeah, around 8:30, 8:15. We see that right about at 8:30 or 8:25 that we end up going and hitting that sell side liquidity here. I'll have to drop down to a smaller chart so we can see it in action. So this is a 5-minute chart. Keep in mind, we marked yesterday's relative equal lows, and we saw that that was a draw from here to here to here. We just removed those, so I probably should have left those in, honestly. But we knew that that was going to be a draw on liquidity. I pointed that out in the morning, and draw did it do right at the morning's morning open. We see that price just plummets through the no week opening gap, comes back, retraces to the top of that new week opening gap, and then continues to pursue a nice giant chunk of price action there. So and then we end the day here, and then we gap down for Asia, the open for today. So let's take a look at why and how could you have played this here. So we are going to look at this aspect here. So we know that price had been going down, 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 down. We also knew that there's relative equal lows down here. So we see price have a short-term low, short-term high, and then a lower low. There's not really more than this gap up here, but had you taken that gap here, added here, that would have been the only heat that you endured for the remainder of this run before over in Asia. Now, you would have only been able to get here and down to here before you got stopped out long. But what does it return to? It returns to this imbalance, the sell side imbalance. And that's on the hourly, okay? So it returns to that. And then we can see it instantly rejects it right there, right there. We can see that it's instantly rejected here. We see that our short-term low here, we have a low, high, low, higher high, lower low. Now that makes this a bearish breaker. So when we return back to it and there's a fair value gap and there's a breaker, that's when magic really starts to happen, right? So this right here, if I can draw it out, when we see us taking out some morning fair value gaps, or we're getting into a premium array, which we've been waiting for quite some time, and we're bearish, this is one of those setups that I oftentimes look for. So what does this mean? So price, price has come down and passed through this fair value gap here. So I wish I could keep drawing. Let me see if I can somehow keep this going. I guess I can't draw one continuous line here, so that kind of sucks. Doesn't look like there's a easy way to do that here. So anyways, when we see a area of liquidity, when we see a high, low taken out, and then we see price continue up to make a higher high, we expect to see displacement now, which we do. We see here. So this was your first one to get in short, and there's an inversion fair value gap here as well that you can take to the downside. So that's the first entry, and I think that was really it before. I mean, I guess technically there's a second entry here with this volume imbalance, but I wouldn't have taken that one just because I'm not as seasoned yet. And then of course, once the day opens, mayhem occurs on that initial first minute. So, yeah, I think that you had plenty of entries around here. If you were chasing, you were going to get chopped out here. But note the new week opening gap high. We marked that as important, right? Before. So these levels, that new weekly open, the algorithm's going to typically come back to these or return to these, or in some way, shape, or form returning back to them. So I treat them as magnets, and lo and behold, this just, gets jacked up a little bit, and then it continues downwards to ultimately about 14,800 down to 14, whatever this is, 14,330. That's a pretty gnarly run if you could hold one runner through the duration of the weeks of the day's expansion. That's what you do when you get multiple contracts, is you can either close one and then raise your stop loss so that you're not losing too much if the other trade goes negative, and then start exploring with the other person, right? So with that, I think that is it for pre-market, or for today's market review. Tomorrow, I think you have to be careful because of how big of a range day this was. If we look at the daily candle, that's a big black candle. So typically during range days, you don't want to be trading during the first half of the day. It's prone to be very choppy. It's prone to be very difficult to trade. I mean, go ahead and trade if you don't believe me. Otherwise, just watch and see what happens. I don't want to be around people during that time. See if there's anything else today. I did not trade it all today, so there's. I mean, I technically I traded Asia. Had a few points there, just nothing more than like $12. Um, so hopefully you will be able to trade Aria Rose. Hey, what's going on? Looks like it's about to bound here. Hey, thanks for joining, Aria. We are just getting done with our daily analysis, and we went down to a few different time frames. We looked at a couple of key levels here. Tomorrow morning, because we had we're having such a big range day. Typically, I mean, let's see what Asia and London does, but it needs a retrace. I mean, it really does. And plus, look at the hourly here, where we see price. Actually, let's go down to a 5-minute. That might be a little bit more helpful. See this gap here? This is a true liquidity void from the end of the day to starting point, right? So we know this is going to be referred to by someone somewhere because there's lack of liquidity there. So no trades occurred at that time. So everyone who was in there got just either skipped over or whatever, whatever it could be. So we want to mark that as a volume imbalance. I mark it black, but you can mark it whatever color you want. But that is clearly something that I would like to see price come back up to, if it will. So let's go there. Okay. So I anticipate price coming back up here. It's now hit a weekly level. So you're gonna have some fighting at this level. It's inevitable. It's a weekly level, right? Let me zoom back out to an hourly so you can see a little bit more. So this was a weekly BISI low, and this was the weekly BISI high up here, with this consequent encroachment getting blown through. And you can kind of see that there's still a gap here. There's a little liquidity void on the 60-minute or the hourly chart. So you can kind of see how that's left open, and this volume imbalance, or this rather liquidity void, is going to be traded to again. We'll have to see how this previous intermediate high gets triggered. We'll just have to see. I'm not sure, but yeah, I think that's it though. I mean, it does look like in Asia we're continuing to move lower. However, we have moved down a lot. So if you are gambling and you want to gamble, feel free to try and take this short. I do see that it's still moving short, and it has potential to continue moving short, but it's hard to take a short where it's at right now, because you just never know. And I don't want to take this long either, because this could continue shorting for quite some time. But I think that it's important to know when you're in a discount and when you're in a premium, meaning which side of the graph are you on, because it makes your choices a lot easier. Yeah. So just watch price here. I mean, I'm really not too concerned. I'm not going to be trading Asia, and I'm weary of the mornings after giant range days. Now, given that Asia is continuing to dump, I imagine we will be heading down towards, let me see if I can pull the daily up once more. Okay, we're on the daily. Okay. Okay. Yeah. those are the targets from before. I mean, we were targeting that this week. So I have no other targets right this moment because we are in a deep discount. We need to at least trade back up to that new week opening gap. If it doesn't get there, if it's super heavy, then we will probably not even, we'll probably see some continuation. But there are some levels before we get to equilibrium here. Do we make it there this week? Probably not, but I think it's possible that we go towards that lower weekly BISI. Okay. So with that, I think that is it for my analysis. You got my key levels. You have an idea of what's coming up next. You know when to be careful. So tomorrow morning, be careful. Those numbers can spike pretty ferociously. So keep that in mind. Just observe it for a few times first. I'm going to record it, of course, so you can always come back and record it, rewatch it, see what kind of things you missed. But I'm going to pretty much call it a night. I am still working on the risk video is done, but I'm just been a little bit tired from work after work. So I still want to make sure I'm doing these market reviews. Hey, what's up, Phoenix? Good to see you, brother. Actually, I don't know if you're a brother or you could be a lady. I don't know. Good to see you, Phoenix. I'm glad to have you here. Always good to see you. And Kirk is here earlier too. Aria Rose, do I have Discord? I do not. So technically, yes, I do have Discord and I'm part of some Discord groups, but I don't have my own Discord for the public yet. I'm not able to curate one. I wouldn't be able to give it enough good time. So I use YouTube as my medium right now. What was it about Asia? So with Asia, we're seeing a continuation right now. And if you note on the 5-minute chart, it's easiest to see on the 5-minute chart, but you can kind of see it here. Price opened up with a huge, what we call this a liquidity void. This is where price is void from trading buy side or sell side. There's just no orders, a true void of orders. So what does that mean? Typically, that means that price is going to want to come back up and hit buy side through there and then continue forward and then bounce off of that, or come back through to take sell side, or it could just take buy side and then reject right there and have sell side taken as well. So this is something that I want you to keep in mind for tomorrow. We hit a very, very important weekly level, so I can kind of mark these as touched now since they're covered. Originally they were untouched still, so I was keeping them there, but now they have been traded to, so I can mark all of these as touched. It's just something that I do. You don't have to do this. It's just easier for me to give myself a visual cue if a level's been traded to or not. So it's easier for me to tell that. Yeah. So now you can see on the daily chart, let's move this up a little bit. You can see that we have a few key area points coming up soon, right? These are weekly and monthly levels down here. We aren't messing around. And this, if I can, this here, upswing equilibrium, what that means is the previous swing, which is this whole swing from here to here, right? From beginning to terminus. The midpoint of that is that 13,677.5. That is what I'm looking for in the long run. It may not get there immediately, but it certainly will. At some point it will. And it's going to be a glorious, it's going to be there's some really high tensions stuff going on in the eastern part of the world. So we can certainly see indices plummet, and a lot of people's 401k is going to go nuts. People are going to panic sell. At some point when it gets down there, you're going to be looking to see, okay, well, what's a good buying point? Where are those areas of liquidity which it could come down to, right? So if I take my Fibonacci, take it from the low to the highest body, I think I might have taken this high to this low. Unless I took this low. Might have taken that low, yeah. So it should be this low here. It really ought to be this low because this is a swing. So my 50% mark, I might need to fix that a little bit to be around 13,760.5. Let's see. ICT mentions a few weeks ago that he is aiming for 13,500-ish. Oh no, I didn't. That's interesting that he had that level as well. Interesting. Was that on a Twitter space or was that on a YouTube video? Because I might have missed that. So good catch though, Phoenix. Thanks for keying me off to that. So you can use like that type of stuff you can use as a draw, but here is the why behind it, right? Like why would he be looking down that way? Well, in this segment, and this is masterclass stuff right now. So in this quadrant, this is the lower half of this whole run up, right? So let's say this is a discount and you want to be buying that. But equally, when we see the upper quadrant of this, we see this half, this is a premium. Oh, okay. Yeah, I'll have to check out that Twitter space. I missed one of the Twitter spaces there, but there's a lot of really good information in Inner Circle Traders Twitter space for sure. He always gives some hints there for sure. So I try to rewatch them or listen to them when I can. That's cool that you listen to it too. We're probably listening to it at the same time sometimes, huh? So sorry, back to the charts here. So we see that this is a premium area. So in a premium, banks and institutions, they cannot be buyers in a premium. That puts too much risk on their end. So what are they doing? They're selling into people who are FOMOing in, and eventually price gets down into a discount where they can then begin to look for key areas to buy. It could be here at previous short-term lows. It could be at fair value gaps that get left open. It could be at other short-term lows, which would be really deep retraces. I don't think it's going to retrace that far, but 1300, I think that makes sense. There's a couple of short-term lows there. There's a monthly buy-side imbalance there, so very key level. Very big important levels there. So let me get rid of this stuff for now. Close through this Fibonacci. And yeah, so does this look like a bullish chart to you? Does this look like it's going to reverse anytime soon? I don't think so, right? But can it retrace? Absolutely it can retrace. But when you take a look at these, and let me do one thing here. I'm going to remove all my drawing objects for the time being so you can see a clean chart. Nothing here. Right? So if you look at where we are at, it failed to get above this high here, right? So now we kind of see the strength at which it is now heading downwards, right? Absolutely it can retrace. Now, what is it going to aim for? Well, if I can get this to work, this short-term low, I could see that being a target. This fair value gap coupled with that short-term low, I could certainly see that be a target. But we have to make it through this bullish order block, and I have a feeling we will make it through that. What that ends up making it turn into is a potential bearish breaker at every single one of those. It potentially can serve as a bearish breaker at that time, because then you'll have a high, low, higher high, and if price hits a lower low and then comes back to this point in time, now you have a bearish breaker, and it has permission to head downwards to take out lower liquidity. So I'm going to put my drawing objects back on, and let's make that visible so I can see the charts later. And yeah, so keep in mind we are at Wednesday, so we're on Thursday now. And one thing you want to be careful of is if you've already hit targets by Thursday, it's very possible that Thursday and Friday can chop around and bounce and head back up to kind of take a breather from taking such a big downward motion. Right now, it seems to be hovering around this weekly buy side imbalance. You know, we slammed through all of that, so I can see this daily volume imbalance. It could certainly hit that, which is right around the consequent encroachment, the midpoint of this bullish order block right there. And actually that lines up really, really well. So that black line that you see there, we're going to make this consequent encroachment line. So I've kind of like taken a 50-50 mark. What the 50-50 mark of that down close candle? It used to be a bullish order block, right? And so what I see here, I also see one of these, which is what's called a volume imbalance, where you see that there's no bodies, but there's wicks coming through here. So I have that as a volume imbalance. So I'm going to be looking at that as well as a potential draw on liquidity. But yeah, I would say, you know, if it hits this consequent encroachment and then heads downwards, this monthly consequent encroachment, your picture insert is the way. Picture insert, what does that mean? Oh, you mean like having my face in the video? Not sure what you mean there. So I think that this is the next draw on liquidity. Even though we've touched this weekly premium, it does look like we're respecting that and even heading slightly lower than that too. So I anticipate we head back up to it, and we ended up rejecting from that point in time and heading down into this volume imbalance. I don't know if that's going to happen during London, if that's going to happen during New York tomorrow. I don't know, but that's what I see happening. And then like you mentioned, I think a retrace. Oh, I see what you're talking about. Gotcha. Okay, there we go. That should be a little bit better. Sorry about that. So this here, this volume imbalance, I was taking the 50-50 mark of this black candle, this down close candle prior to a big run up. So that 50% mark, that's what's called consequent encroachment of a mean, or I think this is a mean threshold actually. Can't remember. So one of the two. It's a 50% mark either way. So that 50% mark marks up, it is perfectly aligned with this volume imbalance here. So I believe that because we are still in a weekly expansion, so remember, and I harped on this before, but every single week there is a open, high, close, and a low. This week is no different. It's going to be an open, a high on Tuesday, expansion lower Wednesday, Thursday, and then Friday could just like kind of drop in there and then retrace for the TGIF to see if we have a TGIF run or not. So this is the weekly chart. You can see there's a weekly imbalance down here. So yes, this can certainly continue downwards. Absolutely. Yeah, absolutely. So I think that we have, there's nothing on the weekly chart, on the higher time frame chart. There's nothing until we get further down to this volume imbalance, or sorry, this sell side imbalance, or buy side imbalance, sell side inefficiency. We haven't touched this at all yet. So this is the last weekly draw on liquidity, and then the lower half of this monthly, I'm going to draw this out so it's a little bit easier to see, this monthly gap here. So we've hit the top quadrant, the upper half of it. We have not traded to the lower half of this, and so we can see that we can certainly price is going to probably, like, retrace up to certain levels, pick up some orders, and then head back downwards. But on a weekly perspective, I anticipate we see a little bit more of these. So these bearish order blocks where price trades up to it and rejects instantly. So yeah, so that was a lot. That was a lot to take through. So remember, weekly expansion, Monday, Tuesday, Wednesday, Thursday, we should still see some expansion to the downside, okay? Unless we hit a really key level. So you have to be careful. This weekly level is a really key level, right? But we have this much larger monthly level down below, 14,172. So around that level is where I would expect price to reach to tomorrow. I could be wrong, but could certainly be wrong, but I think that at the very least, keep this midpoint and volume imbalance on the daily on your chart, because I think that's going to serve as an important draw on liquidity. Okay. And with that, I think that is it for tonight. I've gone on a lot longer than I thought I would. I unfortunately will not be here trading tomorrow, but I will be here with you in spirit. So good luck. If you're new here, I'm a typical inner circle trader student, and you can learn everything that you need to from that channel. It's free. You just have to put in the time. And I'm going to continue to do these reviews even after ICT stops, join the Robbins Cup, which is kind of cool. I'm super psyched about that, actually. I can't wait to see that. But tonight and tomorrow are key for downward, and Friday sideways. How about that? Is that what you are pretty much what you're saying? I would say Thursday expansion to the downside still. I want to see that monthly level tested, but again, that weekly level here, it's a pretty strong level. So we need to see what happens overnight. If I anticipate price trading back up to that and then rejecting that level and heading lower even. So I think that we're going to hit this volume imbalance level and then maybe consolidate around that area. I think there's a very high possibility of that happening. And then if Iran, or if there's a full-scale war, we see escalations right now happening, we have to be really careful, because there could be some really crazy worldwide events that happen that really just spike you one way or the other, and it'll be out of the blue too. None of these fair value gaps, liquidity voids, none of these will be respected if there's a war announcement. That will just be pure manual intervention, and you better hope you have stop losses on, because if you don't, you're going to get caught with your pants down, or you're going to have an awesome trade. Either way, it's lucky. So yep, that's it on what I see. Again, like yesterday was a big range day, but Thursdays typically are expansion days, so keep that in mind. Good luck trading tomorrow. Trade safe. I won't be there with you, but I will probably I'll probably pop on briefly for a couple minutes in the morning tomorrow, and then see what happened overnight, and just kind of like get a gauge, get a feel for what else is left. We've already filled in a huge level of liquidity here. So what I would like to see is I would like to see us either reject from the weekly level. I would like to see us either come down here, reject from this level to head downwards, or come down here, reject from this blue fair value gap area and treat that as what's called an inversion fair value gap, because this whole area is one daily fair value gap of specifically a buy side imbalance, sell side inefficiency fair value gap. So it has now been traded up and then traded down. So it's been rebalanced. So any price movement which goes back up into that blue area, we should see that reject. And we do see that on the lower time frames, actually. Let me go down to the 1 minute here. Yeah, I agree. That is not the best scenario with US boats in the Middle East. I agree. Oh gosh, is this gonna be able to show you? Okay, so this is on the 1 minute, right? So remember that big blue box, this one at least. This is the bottom of that daily fair value gap that's balanced range now. So keep in mind we do have this here, so it can certainly come back up here, but we see how price reacted to it. So you see how price jumped up into it, took these buy stops here in Asia. We're going to do a little bit of Asia charting, folks. So you see it took these buy stops there and actually was close to taking these out as well. It didn't quite do that. So what is this form here? What is this form right here where price made a short-term high and made almost, but not quite, another short-term high? So those are relative equal highs. That's basically the algorithm telling you, tipping its hand to you and saying, hey, I am engineering liquidity right there. Look at it. It's out there. It's right there, obvious in the open for you. Disco, thanks. Appreciate you. Yes, exactly. Equal highs. So Phoenix has got it. So what you want to do is you want to pull that out in time. Now, one thing to consider, if price is insanely heavy to the downside, it might not even get back up here. But again, we are at a weekly level. So this is a key weekly level. I don't know where I put that weekly. Let me see. Oh, I put it way over here. That one. So this is a premium BISI low. We see price immediately rejecting off of that blue box, which remember, on the higher time frame, let's go back to the daily. Remember that on a higher time frame, if I can bring all this back up, this whole area was a fair value gap, and we saw price on the lower time frame reject off of that and head all the way down into this weekly BISI low. So you're seeing weakness in price, like not just any kind of weakness. You're seeing pretty severe weakness. That doesn't mean that price can't retrace. It certainly can retrace, and that's what I'm kind of banking on as well. But if we go back down to that 1 minute chart, we see on the 1 minute chart that this liquidity void has to be filled at some point as well. If it doesn't fill that in, if this never makes it all the way up here into this part of the fair value gap, which I think it will make it up there, but if it doesn't, that indicates even more weakness. So I think it should consolidate around here. I mean, yes, I'm seeing a little bit of I'm seeing that it has broken through. So low, Here, let's go back up here. We see this formed one. Oops, let me make that a little straighter line for you. So we see this was creating, the algorithm was creating and engineering liquidity here, right? Retail, what does retail see this as? Low, oh, bounced. Low, oh, bounced again. Oh, it can't get through. Oh, it definitely can't get through. And then it blows through there, right? It takes out everyone who went long here. It takes out their stops and then some. So they get stopped out selling. Others are selling as well. And it continues downwards. So we need to see what happens at this weekly BISI low. At this point, I would expect price to come back up here and then maybe head lower or consolidate here. Head up, take out these during London and continue upwards to fill out this liquidity void. Or if it's not strong enough, I guess if it's not strong enough, let me look at the 15-minute just to get a pulse. So you can see how it's even on the 15-minute, there's a liquidity void here. So I think it's got to come up there to retrace first before it can head lower. And this weekly bounce point would be perfect for that. If we see it go, so this is another key here. So from here to here, let me get the less crud one. We have that 50% mark there, okay? If we get down to 14,290.69, there's a very high likelihood that price is going to want to draw down into this volume imbalance the rest of the way, which is a good 45 some handles, right? So watch that midpoint, and if it continues and gets there, it's going to continue downwards first. We do have that monthly draw there, so we're going to keep that in mind as well, but just keep note of that. I'm not going to be trading Asia. I'm actually going to go to sleep now because I need sleep. Had a pretty tough week. So I think that's it for tonight, though. I joined the fiasco for a bit. Was bad on my part. Roller coaster rally there. Wouldn't break. Yeah, that was... yeah, that was a little bit of a tiny rally. But so that's also why... You can trade Asia, you can trade London. It's going to be a lot slower and the volatility is going to be a lot less. So if you're going to trade them, use micros and use them as practice. London probably has the higher chance of making a larger run. And oftentimes we would like to see it take out Asia's highs before we run lower. But what do I do in real life? I'm actually a consultant in IT. So I do a lot of cloud IT consulting in real life. So, but as you can see, I have a passion for this. I love the markets. Ever since I touched futures, I couldn't go back. It's just so much fun. So I'm hoping that maybe in the next year or two, I can continue recording price action like this and having, people like yourselves be able to come here and listen and, help not only get my thoughts out there, but also record the price action so I can go back and look on the days like Thursday where I have to go into work. I can come back and study price action, right? And it's really key because when you see this kind of stuff, these wicks, you don't really know how you felt when ticks are ticking, because, at some point these wicks were full on green candles, right? So, I mean, it's just better to record price action like that. Congrats. I see you came from, I was born in America actually. So I was AB American born and, born in Ohio of all places. So, yeah. Can't complain. Being American is great. I'm a big fan. But I also love Asia too. Options, currency, crypto, stocks, pick one. if I had to, I would pick, I think knowing what I know now, I might pick currencies or options. Crypto is also excellent, but with currency and options, you can with options you can make a lot with a little bit of money, but you can also lose a lot if you don't know what you're doing. So let's see, Aria Rose, which fund are you trading? Sure, yeah, that's a great question. Oh, I see. Okay, Phoenix, let me get to Aria's question and then I'll come back to yours. Okay, so Aria, if you go to my channel, this is Inner Circle. This is the channel that I train from, Inner Circle Trader. But if you go to my channel, I think I might have it up somewhere here. Well, if not, just go to youtube.com/@JohnnyLeeLin. And you click on this link. This will actually send you straight over to Apex Trader Funding. So this is a site that lets you trade futures. And right now they're running a 90% off sale. So if you use this code DBVIBOHK, you'll get 90% off any of these accounts for, I think they're running this for 13 days. And yeah, so I might pick up a few. I think I'm allowed three more accounts total. Because remember, I ended up blowing 3 accounts back when I was like, very low sleep. Not proud of that, but I will never blow another one. So I use these 50K accounts here, and you should be able to, click on it. Just read, if you're new to futures trading, you don't even need to buy, just go to plus 500. They have like demo trading futures. You can just practice over there for free. This one uses NinjaTrader, or if you have TradingView, you can buy a slightly more expensive plan just by a few more dollars, and that'll let you use a Tradeovate, which is connected to TradingView. So you could trade on your TradingView as well. So I use this site is one of the best ones that I've seen. Yes, for those that are really greedy and they want to pay out every single day, yeah, you can go to some other sites, but you're going to be paying a premium. So just keep that in mind. So Aria, I would recommend you watch, if you go to my playlist and then you go to the new futures trader, how to go about Apex, I made 2 videos. So an intro guide to Apex Trader and how to pass evaluation accounts and some strategies involved with that. So watch those 2 videos. Those will be really important for you. Okay. So hope that answered your question. And then for Phoenix, oh, that's awesome. You trade with Tradeovate. It looks awesome. Yeah, I learned NinjaTrader and I really enjoy it. And I just can't trade on mobile as well. So I would love to do it someday though. Just to have it on mobile, just to be able to trade on mobile. So Phoenix, for your earlier question though, you came from what in markets over to futures? So I came from options over from futures. Yeah, I have some long-term stock investments, but I came from options and losing a lot of money in options. I found one of my earliest connections in options was at one Discord actually, and I knew I wanted to trade, but I didn't know how. I didn't know any sort of theory, and I lost my ass because nobody could explain the markets to me. They couldn't explain why. They could just have a whole bunch of conjectures, right? And so eventually one of my mentors there forwarded me over to another mentor who forwarded me over to ICT. So October of 2022, I started studying ICT every day, hours upon hours. I was studying it on vacations. I was taking notes feverishly. I have huge notebooks of just ICT. And and it's definitely eye-opening. Oh, thanks, thanks, Phoenix. You watch those videos. I appreciate you. Um, they appreciate you thinking that they're A++. I appreciate you. So Aria Rose, I blew a PA today. Oh no. I understand that feeling completely, and don't get too down. Hopefully you were able to journal your trades and snapshot why you took those trades. And I know it's painful, but it's worthwhile looking into, and like, why did you take those trades? I will be setting up, I'm going to do some work on this tonight. I promised Kirk and some other folks as well that I was going to create a landing page for my website, just a simple landing page, and then I'll once you put in your email, that'll link you over to the risk management tool, which I'll release. Try to release that this weekend. Let me take a look at that, and I'll try to release that this weekend. Aria, what you need to do is really be careful with your risk. All right, so I'm gonna give you a sneak preview right now of something that I created that you'll get access to if you just, all you have to do is put in your email on my site when I open up the link, and I'll let you download it for free, and you can play around with it as well. So I have a risk lesson coming up, and this is a tool that I made for myself. It covers micro NASDAQ, because with these Apex funds, you don't actually have a 50K account. You have a $2,500 drawdown account. And basically what I did here is, for one micro, I calculated what is your account size for you to have a max loss of 1%. What can you risk so that you're only risking 1% of your account, right? Now, this means that at any given time, you're risking $25 of a loss for whatever gain that you have, right? And to calculate what you can gain, I've also added some quick little calculators for micro NASDAQ. And you can see for 10 handles or 10 points, your profit's $20. 20 handles, $40. 30 handles, $60. So if you're going for like a 3 to 1 R trades, you're typically looking for 30 handles. That's easy. Okay. I'm not going to say it's easy to do in NASDAQ, because if you haven't learned how to trade properly yet, it can be very, very difficult. So for you, Aria, what I would recommend, I don't know who you follow or what your model is or how you trade, but I can guarantee you, if you follow this man and look through some of the playlists, starting with the 2022 content, I think it's where's that 2022 mentorship, somewhere around here. Where is it? There it is. Okay, so start with this one here. Okay, take notes, take it slow, and study this. This should help give you your model, at least a simple model that you can follow, and look for that, backtest it over time and see what happens there. Okay, so Aria, good luck with that. I will create a risk management video and release that soon. But when you start thinking about yourself in terms of a risk manager instead of a trader, your trading will greatly differ. It will change how you think about trading, and how your core goal is to preserve capital. Phoenix, ABS options is so much work versus futures. I agree 100%. Friend posted an ICT video, and it was the interview with Michael Huddleston, and like the story. We're also interested on how everything works, which is good and bad. Yeah, 100%. Though the ICT videos can be a huge black hole. You can stay in them for hours upon hours and still have to rewatch the video and learn something new. I find myself doing that all the time with some of the old lessons. So I totally understand. So Aria, hopefully that was a little helpful. I know it can be tough when you blow an account, but keep your chin up. Hopefully that wasn't a large percentage of your income. Hopefully you have enough side income or main income to cover your ability to purchase evaluations. Yeah, I think Johnny Lee, Lynn, I would ask Arya Rose, have you been profitable on Sim? Yeah, absolutely. Arya, have you been profitable on Sim? Because you can transfer those skills that you learn on Sim to real. Yeah, absolutely. And that's something that I wish somebody told me a long time ago too. I've blown many accounts, and they're not fun. It's not fun to blow an account, especially when you got to performance account. And yeah, if you can trade on Sim, if you blow an account, I 100% think you should be trading on Sim for the next week at least. Find your model, trade your model, backtest and look where you would have found or seen your model. And once you can define your model properly, that's when you know you're allowed to trade again. So good luck. I definitely see like awesome suggestions, Phoenix. I can tell you've studied ICT as well, so maybe I'll look forward to throwing some ideas. You'll see a lot of familiar ideas as Michael Huddleston ends up leaving. Yeah, absolutely. I didn't use Sim until recently and learned so much on it. Yeah, once I started blowing accounts, I went back to Sim for about a week straight, 2 weeks straight, and I learned so much more about myself. And you learn some of the best habits on Sim, and then you're right. Like Phoenix says, you can transfer them over to live money. Okay, I have this one's a little bit longer than usual, so I think I have to call it a night. So I'm gonna leave it there for tonight. We're gonna keep it there for tonight. It's a great discussion tonight. Appreciate all the discussion tonight in chat. Thanks for joining, Phoenix, Aria, Dusko, Kirk, if you're still here. Thanks a lot for coming, and really appreciate you guys, and hope you guys get some really good trades. Tweet me, at Johnny Leland on Twitter. I'll probably have my email up soon on the website as well. But yeah, I will. No, this is, I love trading, and I think any trader who loves trading futures as well is really excited by this. So I honestly, this channel is really just to create a resource that people can then use to backtest. You can go back and watch this video from today's live trading, and you can see what price did. How would you have reacted if the 1 minute chart is like, giving you some big green, big black candles? How might you have reacted at that time when you noticed that your setup was forming? That's what I hope to continue to just record price action, and have this like a year from now, people can go back to FOMC on some FOMC Thursday and go back to 2:00 p.m. on that day and see what happened and study that. They're going to be able to refer back to this years from now. So I hope to continue building this over time. And unfortunately, thanks, Dusko. Thank you so much for coming. And I'm going to close the stream for tonight. Well, hopefully you guys get some rest. Don't stay up too late trading if you can help it. But if you are, good luck tonight, okay? But try to get some rest as well. I won't see you tomorrow, so hopefully you can make a few bucks for me tomorrow. But I'll be back on Friday. So see you in the morning, and have a good night. Good night, everybody. Thanks for joining, and we'll talk soon, okay? Take care.